Why do private banks never tell you about the $109 billion profit machine they've been operating in plain sight since 1913, disguised as a government institution? They say the Federal Reserve is a public institution created to stabilize the economy and protect your savings from financial panics. The truth is, it's the most profitable private banking cartel in history, generating guaranteed returns for its shareholders, while systematically transferring wealth from American workers to Wall Street. Banks through a mechanism so clever that most people never realize they're being robbed. In 2023 alone, the Federal Reserve generated $758 billion in income, more than Apple, Google, and Microsoft combined, yet paid only $76 billion to the US Treasury, while keeping $109 billion for operating expenses that mysteriously flow back to its member banks. This isn't monetary policy. It's the largest wealth extraction scheme ever devised, operating under the cover of central banking while enriching the same Wall Street dynasties that created it over a century ago. In the next 13 minutes, I'll expose the exact mechanism the Fed uses to generate guaranteed profits from your labor, reveal the historical evidence that proves this system was designed to enrich private bankers at public expense, and show you 3 specific strategies to protect your wealth from a profit machine that treats your purchasing power as its raw material. Step inside the opulent Jekyll Island Club on the evening of November 22, 1910, where 6 men representing 1/4 of the world's wealth sat around a mahogany table, designing the most profitable banking scheme in human history. Senator Nelson Aldrich, Paul Warburg of the Rothschild-connected Kuhn Loeb Bank, and J.P. Morgan's representative Henry Davison had traveled under false names to this exclusive Georgia retreat, telling the press they were going duck hunting, while actually hunting for a way to legally monopolize America's money supply. The air was thick with expensive cigars and the excitement of men who understood they were about to create a money machine that would generate profits in perpetuity. Warburg, the German banking heir who had immigrated specifically to establish European-style central banking in America, spread detailed plans across the table, showing how a privately owned institution could appear governmental while operating for private profit. The genius of their scheme was elegant: create money from nothing, lend it to the government at interest, and use the profits to buy more government bonds, creating a self-reinforcing cycle of wealth extraction that would continue forever. They would call it the Federal Reserve to sound governmental, structure it with regional banks to appear decentralized, and staff it with economists to appear scientific, all while ensuring that its shareholders, the major commercial banks, would receive guaranteed dividends and risk-free profits from every dollar created. For 9 secretive days, they refined the plan that would allow them to literally tax every economic transaction in America through inflation while appearing to provide a public service. The Federal Reserve Act, passed on December 23, 1913, while most congressmen were home for Christmas, granted this private cartel the exclusive right to create America's money supply and charge the government interest for the privilege. From day one, it was designed not to serve the public, but to generate guaranteed profits for its private owners by monetizing the full faith and credit of the United States government. The Federal Reserve profit machine activated immediately and with devastating efficiency for the American public. Within 5 years of its 1913 creation, the Fed had doubled the money supply to finance World War I, generating $2.1 billion in interest payments from the key U.S. government to its member banks, equivalent to $65 billion today, while ordinary Americans watched inflation destroy 79% of their purchasing power between 1914 and 1920. Farm wife Sarah McKenna of Kansas saw her family's grocery costs triple while her husband's wheat prices were controlled by government price fixing, forcing them to mortgage their debt-free 240-acre farm to survive the Fed-induced inflation. Meanwhile, Federal Reserve member banks earned guaranteed 6% dividends on their Fed stock, while also collecting interest on the government bonds purchased with newly created money. The human cost was staggering, but hidden from public view. Millions of families lost their savings to inflation while Fed shareholders collected profits from both the money creation and the resulting government debt. By 1929, the Federal Reserve's policies had concentrated so much wealth in member banks that they owned 40% of all American assets, setting up the conditions for the Great Depression. But here's what history books miss. The crash wasn't a policy failure, it was a profit opportunity. During the Depression, Fed member banks used their government-backed reserves to purchase failed banks at pennies on the dollar, consolidating their control over American finance, while earning profits from the very crisis their policies had created. The wealth didn't disappear during the Depression. It simply moved from Main Street to Wall Street through the Federal Reserve's profit extraction mechanism. Small businessman Frank Kowalski of Detroit watched his $12,000 in business savings evaporate through bank failures, while J.P. Morgan's bank, a Fed shareholder, used newly created Fed money to purchase Kowalski's failed competitor's assets for $3,000. The mathematical elegance was undeniable. Every dollar the Fed created generated interest income for its shareholders while reducing the purchasing power of everyone else's savings. Today's Federal Reserve has perfected its profit machine beyond the Jekyll Island conspirators' wildest dreams, generating $758 billion in 2023, while ordinary Americans struggle with inflation that has destroyed 96% of the dollar's purchasing power since 1913. Jerome Powell continues the same wealth extraction playbook. Create trillions from nothing during emergencies, buy government bonds with the new money, and collect guaranteed interest while claiming to serve the public good. Since 2008, the Fed has created $9 trillion through quantitative easing, purchasing government and corporate bonds that generate steady income streams for member banks. While your grocery bills have doubled and housing costs have soared 40% since 2020, the profit mechanism remains identical. J.P. Morgan Chase, Bank of America, and Goldman Sachs, all Federal Reserve shareholders, earned a combined $89 billion in profits during 2023, while families struggle with transitory inflation that never transitions downward. Regional bank failures like Silicon Valley Bank and Credit Suisse reveal how the system works. Failed banks are purchased by Fed member banks using government-backed reserves, consolidating control while socializing losses and privatizing gains. The Fed's latest innovation is preparing central bank digital currencies, CBDCs, that will allow real-time profit extraction from every transaction, taking the Jekyll Island dream of monetizing all economic activity to its ultimate conclusion. Modern Americans face the same choice as families in 1920. Watch their purchasing power get systematically extracted by the Fed's profit machine, or understand the game and position themselves alongside the beneficiaries rather than the victims. The numbers are undeniable. Fed member banks have generated over $3 trillion in profits since 2008, while median household wealth has stagnated, proving that the system works exactly as designed. Private profits, public losses, all disguised as monetary policy for the greater good. Here's your 3-step strategy to protect yourself from the Federal Reserve's profit extraction machine and position yourself with its beneficiaries rather than its victims. First, own assets that benefit from Fed money creation instead of suffering from it. Dividend-paying stocks in Fed member banks, real estate that appreciates with inflation, and commodities that rise when currency is debased. The Jekyll Island conspirators understood that those who own assets that increase with money printing profit from the system, while those who hold cash and bonds get systematically robbed. Allocate 60–70% of your wealth to inflation-hedged assets that benefit from Fed policies rather than being destroyed by them. Second, Understand that the Fed's profit machine requires your financial ignorance to function. Educate yourself about how money creation enriches banks while impoverishing savers, and position yourself accordingly by owning bank stocks rather than being their victim. Buy shares in JP Morgan Chase, Bank of America, and other Fed shareholders, so you receive dividends from the same profit machine that's extracting wealth from unprepared Americans. Third, diversify beyond dollar-denominated assets by holding precious metals, foreign currencies, and international investments that maintain value when the Fed debases the dollar for its shareholders' benefit. The system will continue operating exactly as designed until Americans understand they're being systematically robbed by private banks disguised as public institutions. Your choice is simple. Remain ignorant and get systematically impoverished by Fed policies, or understand the game and position yourself with the beneficiaries of the largest wealth extraction scheme in history. The profit machine has been running for 111 years and will continue until the American people understand what's really happening behind the government facade. History doesn't repeat, but if you don't understand it, it will crush you all the same. Subscribe now, because next week, I'm revealing the specific Federal Reserve shareholder stocks and inflation-proof investments that protect you from their profit extraction machine while actually benefiting from the system they designed to transfer wealth from your pocket to theirs.